At the beginning of 2022, Austin was the best performing market in the US, and now it's one of the worst. In today's video, we're going to look at where things went wrong for the Austin market as well as how bad it could get. Let's get into it. Today's video is an update to our regional analysis video on Austin back in April of this year. Back then, Austin was the #1 metropolitan area in my top 20 list of markets to watch. This was because it had the best combination of sales, price growth, and dollar increase in price. Its price performance was spectacular. From the onset of the pandemic through its peak in April 2022, the Austin metro area saw prices increase by 70%. Fast forward to September, the most recent data we have from Redfin, a national real estate brokerage, and we see that prices are down 7.3% from the recent peak. While that may not sound like much right now, there is the potential for a much larger correction in prices in the months ahead. In the rest of this video, we're going to look at the underlying supply and demand data to gauge the current health of the market, and then we'll take a look at how far prices could fall and when we could expect a bottom. Looking at the Austin housing market supply, inventory levels have risen sharply over the last year and have almost returned to the previous peak in November 2018. New listings have returned to just below pre-pandemic averages, which is slightly better than other areas where new listings have practically dried up as they have plunged far below pre-pandemic averages. On the demand side, sales have collapsed from the pandemic peak in October 2020 and have turned lower than pre-pandemic levels. This level of sales has led to the rise in inventory despite the lower new listings, which is why we've seen a big increase in the month's supply of homes, which measures how fast the inventory would be exhausted at the current pace of sales. The sales to list price ratio shows the intensity of demand has greatly subsided as it has returned to about 100, meaning that on average homes are selling at list price and the massive bidding wars in 2020 and 2021 have ended. We're also seeing homes staying on the market longer as the average days on market has increased to the highest since September 2012. And finally, looking at the number of homes on the market dropping their price, it has surged to over 40%, which is the highest since Redfin started collecting data on this back in February 2012. As you can see from the underlying statistics, the Austin market is in trouble right now. Supply levels are rising, mostly from plummeting transaction volumes, given that new listings are also trending lower. And demand has just collapsed. The bidding wars are over, homes are sitting on the market longer, and we're seeing more price drops than at any point in the last 10 years. What happens when you get higher supply and cratering demand? You get lower prices. To assess how low prices could go, we need to take into consideration why demand is falling so hard. To anyone who's been paying attention to real estate the last few months, I'm sure you know why. Mortgage rates. They have absolutely surged this year as the Federal Reserve is battling the highest inflation in 40 years and raising rates as their primary tool to do it. What this has done is made housing payments much more expensive. Here I've calculated what the average housing payment is as a percent of median household income in Austin, and right now it is at 38%. Higher than it's been in data going back to 1989. In fact, before the pandemic, this percentage never went above 25%. This extreme level of unaffordability brought about first by home prices that shot up in 2021 and then mortgage rates in 2022 is the primary driver of the falling prices right now. Also, one of the big strengths Austin had going for it in the early days of the pandemic was the growing tech sector in the area, a trend towards remote working and the affordability Austin offered. All of those fundamentals are being eroded. The tech sector has shown signs of contracting as layoffs are happening at many of the big names in tech, and the work from home renaissance appears to be coming to an end as well, in the tech sector as well as in the larger economy. All signs appear to be pointing towards further price declines in the near term. To estimate how much further prices could fall in Austin, I'm going to consider a few things. First, I'm going to assume that the average payment as a percent of income goes from the current 38% down to 30%, which is the level at which the U.S. government considers a household to be cost burdened. This would be a slightly conservative assumption given that historically this percentage hasn't gone past 25%. Second, I'm going to assume mortgage rates stay at 7%, which again is a conservative assumption. The average 30-year fixed rate mortgage is at 6.95% as of Thursday, November 3rd, and it is more likely than not to go higher given that the Federal Reserve has made it clear their intention to keep raising rates. But for this estimation, we'll keep it at 7%. Third, I'm going to assume that the median household income will continue to grow in line with historical averages. This may also be a conservative assumption given the fears many have that we're heading for a recession in 2023 because of the monetary tightening the Federal Reserve is engaged in right now as they fight inflation. If you want to stay up to date on the latest analysis for the economy overall, check out my other channel, PapayaCast, where I'm releasing a monthly video on the state of the economy and if a recession is on the way. I'll put a link to that channel as well as my latest video on the subject in the description down below. So, given all these assumptions, I estimate that the median home price would have to fall to $331,000 in order for the average housing payment as a percent of income to drop to 30%. As of the peak in April 2022, the median home price in the Austin metro area was $531,000 on a seasonally adjusted basis. So my estimate of $331,000 median price would represent a 38% decrease from its peak back in April. Estimating when we could see this 38% decline is a bit tricky. We don't have a good historical example to work off of. Unlike many other metropolitan areas, Austin didn't really see a significant decline in prices during the last nationwide housing crisis. It fared pretty well. So we can't look to what happened before to inform our estimate of what might happen in the months to come. One thing we can do is look at the speed at which prices have been falling so far and use that to produce an estimate of when we might see a bottom. It's not the best method, but we don't have a lot of great alternatives to work with right now. So the recent peak was a seasonally adjusted $531,000 back in April, and 5 months later, the price is at $492,000 as of September. That works out to be a $7,800 decrease per month. Now, given that our current estimate for a low point could be $331,000, it would take 20 more months at the current pace of declines to get there, or about May 2024. This may sound like a long time for prices to be falling, but housing markets don't fall as fast as things like the stock market. Indeed, the last national housing market crash in the U.S. took 61 months to go from the peak in June 2005 to the bottom in July 2010. So that's what things are looking like for the Austin metro area housing market. Obviously, things could change if we see further increase to mortgage rates, drops in income from a recession, or the average housing payment as a percent of income could settle in at a higher or lower level. But given all the assumptions I laid out earlier, we're looking at a 38% decline in home prices by around May 2024. If you want to stay up to date on the state of the housing market throughout the country, make sure you're subscribed to this channel and hit that notification bell down below so you know right away when my next video comes out. And if you like this video, please leave it a thumbs up to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.